Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's February 4th. We got a couple economic news releases scheduled for today, and we'll start with the primer for Friday. The Bureau of Labor Statistics coming out with their jobs numbers on Friday. So today we got the ADP's numbers for the month of January. So back in December, we had 253,000 new jobs created in the private sector, and came in at 213. So not a great number there. Kind of a little bit disappointing there. Then we got the ISM non-manufacturing number for month of January. So this is the services side of things. So we had a 56.5% in month of December. Forecast for January was supposed to continue, and it had a slight increase to 56.7. So a little bit better number right there. ADP, we don't put a lot of weight to it because it's not always the most accurate measure for in terms of employment numbers, but it is kind of like a little primer, kind of give us kind of a gauge as to a feeling as to where things might lead. But again, it's not always in the right direction because we've had many times the opposite. So let's go ahead and take a look here at the headline news. And the stock market's down. It didn't like the jobs numbers. Also, but something that's kind of weighing it a little bit more was the oil. Oil dropped some of its gains throughout the week, so the oil is kind of going. Price per barrel is going up, and they lost some of that today. So they were kind of disappointed in that terms. They did, however, of course, like the ISM services index, the numbers on that. So that kind of helped out a little bit, but so far it's kind of pulling back more this morning. Bond market wise, we got a huge drop. It was mostly yesterday. We had kind of the big drop yesterday as the stock market continued rallying. It was pulling money out of the bond market, which is worsening. Interest rates were worsening yesterday. Today it started that trend, but it could go the opposite direction as the market continue. If it continues to worsen, a lot of that money will go back into the bond market, which will help out rates. Currently, we're down by 8 basis points so far this morning, which would translate a little bit worsening in the price for interest rates this morning. But again, that could get a little bit better as the day goes on if the stock market continues declining today. All right, folks. Hey, thanks so much for watching. I hope you guys have a wonderful day, and we'll catch you guys tomorrow.